friends, welcome to our YouTube channel Trading Ninja. If you are not already subscribed to the channel, please subscribe to the channel and hit the bell icon. Thank you. Why the stock market is falling? What should you do in this market correction? The world markets have corrected for the last few days, especially the Indian stock market indexes Nifty and Sensex. Such corrections always tempts the investors and traders alike to buy stocks available at cheaper valuations. But should you or should you not buy stocks in such bearish market conditions? The answer to this question is complicated. Now we will discuss what should be the correct strategy that should be employed by the retail investors and traders. Significant correction in Nifty. Important levels have been broken. Nifty 50, that is the Indian stock market index, has corrected significantly over the past month. But this presents us an opportunity, or should investors or swing traders wait more? Since the Nifty 50 has broken important support levels, no one can say with certainty that the correction has completed and bullish trend will resume. Rising bond yields combined with bearish global markets have further led to the fall of the market over the past week. What are the reasons for the market correction? One major reason for the fall in Nifty is the profit booking by the FIIs, or foreign institutional investors, in the Indian stock market. FIIs have been pumping millions in the Indian stock market since November 2020. Profit booking, or them pulling back their money, has caused unrest in the stock market. Also, the bond yields are rising continuously, which also has led to the bearishness in the stock market. Combined with the negative global sentiment due to the rising COVID cases, the market has shown decent pullback or correction recently. Also, since this is the end of the financial year, most institutions and investors are booking their loss-making investments to reduce the tax burden, which is also contributing further to the bearishness of the market. Should you buy stocks at cheap valuations in market correction? Whenever the stock market plummets, the retail investors are tempted to buy stocks that are available at cheaper valuations. But no one knows when the correction might end and when will the market bottom out. So the best strategy should be to watch for important levels on the index as well as track the stocks for technical support levels. If the stocks that you are interested in are holding their support levels, then that might be an indication of a buying opportunity in those stocks. Buying blindly just because the market has fallen or because your favorite stock is available at cheaper price is a wrong strategy. If a stock breaks a major support level, then the trader or investor must wait because more bearish move will certainly manifest in that particular stock. In case of break of important support levels, traders must look for shorting opportunities. What should investors do during market correction? One strategy every investor can apply during such market corrections is to buy or hold only low beta stocks. If an investor is holding high beta stocks during such huge corrections, then it will damage the portfolio significantly. The best strategy should be to move from high beta stocks to low beta stocks. Investors must look to book profits wherever possible in high beta stocks. Those low beta stocks that are holding their major support levels should be the number one buying candidates for every investor and swing trader. If you don't know what beta is, then please visit our website. We have a detailed article explaining what beta is in the stock market. The link for the same will be provided in this video's description. Investors must avoid averaging down their holdings in order to cut losses. Averaging down is a classical mistake that new retail investors make. Great examples are of Reliance Communication and Yes Bank, where investors kept on averaging down in the hope of a bullish reversal, but that move just never came. Averaging down is very bad and can lead to further increase in the losses in the stock market. So remember to never average a falling stock, because if it further falls, it will lead to more and more losses and more pain. What should traders do in the market correction? Traders' main focus in any market correction should be to go with the trend and find high beta stocks that have given significant bullish moves in the bull run. Such high beta stocks fall like a pack of cards whenever the index tanks, thus giving great profit making opportunities to day traders. Traders can use strategies like ABCD pattern, opening range breakouts, VWAP strategies, or moving average strategies to short such high beta stocks during market corrections. Just remember one thing: a bullish market moves slowly and steadily like someone climbing stairs, and bearish market just jumps out of the window from the third floor of the building. It happens quick, and traders and investors must be ready for such corrections or pullbacks. Final thoughts: stock market correction are just the normal part of the process. No trader or investor should be intimidated by the corrections or pullback in the market. A correction, in fact, gives retail investors opportunities to buy stocks at low price to earning ratios. But buying just because the stock is available at attractive or low price isn't a strategy that anyone should employ. Rather, one must look carefully for the best opportunities using both technical and fundamental analysis. Summary: so we have discussed why the stock market is falling. The bond yields are increasing continuously. There is a profit booking by the financial institutions. There is a bearish global sentiment due to the rising COVID cases all over the world, and the loss booking at the end of financial year to reduce tax burden is further causing the bearishness in the stock market. After that, we discussed what should investors do during the market corrections. Investors must book profit in high beta stocks and move from high beta to low beta stocks wherever possible. After that, we discussed what should traders do during the market correction. Traders must find shorting opportunities in high beta stocks and always trade with the trend. So guys, this is the end of the video. Thanks for watching. Please like this video and share with your friends. And if you are already not subscribed, please subscribe to the channel. Thank you again.